All right, so that's about the global equity markets, but let's also talk about the US energy markets. They are feeling intense pressure this week as geopolitical tensions in West Asia continue to drive fuel costs higher. In response, the US government has announced a major release of crude oil from its emergency reserves aimed at cooling prices for drivers and businesses. Gasoline costs at the pump, they are also now above levels not seen in nearly 2 years. The turmoil stems from an ongoing war involving the United States, Israel and Iran, which has disrupted global oil exports, especially through the Strait of Hormuz, which is a key shipping lane for about 1/5 of the world's crude oil. Analysts warn that any prolonged disruption could remove up to 4 million barrels per day from global supply, putting further upward pressure on fuel costs. As a result, US drivers are feeling the pinch at the pump, as average gasoline prices in the United States have climbed to around $3.50 per gallon at the pump. That's the highest level seen since mid-2024. This to try to counter the upward pressure on fuel costs. The US Department of Energy announced that it will release 172 million barrels of oil from the Strategic Petroleum Reserve starting next week. This is part of a broader release of 400 million barrels agreed by the 32-nation International Energy Agency. The SPR currently holds about 1.05 billion barrels, so this release represents roughly about 16% of the total reserves. Officials say that US release will take about 4 months to deliver to the market, but it's not an instant fix. The plan aims to make more crude available to refiners, easing supply shortages that are contributing to higher prices at the pump. Some refiners, however, warn that logistical bottlenecks that could delay the impact, especially in the Midwest and Southeast. Despite the announcement, crude oil prices have remained volatile, with traders watching closely whether the reserve release will be enough to calm markets amid continued geopolitical risk. Some analysts warn that prices could further rise if the Strait of Hormuz remains unstable. Market watchers note that any significant escalation between Iran and the US-Israel could trigger spikes above $90 per barrel, which would push gas above $4 a gallon in some states. And the surging gasoline prices are squeezing drivers nationwide, and the government is taking an unprecedented step to help ease that pressure by tapping emergency oil reserves. But analysts say that any relief will take time to reach the pumps, especially as global supply risks persist.